I honestly think I've struck a gold mine here because I don't know if I've mentioned this before, but I do a bit of stock trading, and these last, I'd say honestly since last April, I kind of got into it full time. It had always been a conversation, maybe when I was 15, I had a friend that was into it big time, and so I've kind of heard about it for like let's say 5 years, but I never really did anything with it. I had mutual funds when I was 18, 19 ish, and then I cashed out, maybe a year after doing so. So I didn't really own them for very long, but the point being is, last April or so, I got into it, and I made a lot of errors. I bought a stock, it dropped, like I lost like it was down like 4 grand or something, and over the course of the summer and even the fall, I was having a really hard time because I had bought some things, and I was doing the research, and I was looking at different industries, and I could, it doesn't take a genius to figure out that the oil and gas industry is extremely undervalued to the point where people are actually not buying it because it's oil and gas, and that's the only reason, which is stupid because why would you do that? It's not going anywhere. We're still going to need it, and renewables aren't going to matter for a while. So on that topic, I bought a lot of oil and gas, probably around August, and everything tanked hard into October. And at this point, I was able to cash out my mutual funds and buy in. And the next couple months after that were awesome. I made my biggest gains ever. Following the months after that, but it kind of hit me like I was doing this whole thing wrong. Like, this thing happened recently where a bunch of guys on Reddit from the Wall Street Bets Reddit page, they basically artificially hiked up a stock for hype. And I'm thinking, valuations don't even matter. Like, I was investing purely on fundamentals, and it wasn't really working. And granted, the average life cycle of the bear market's 14 months. So that was only like maybe 6 months in. So it made sense that things were going to continue to drop, but it didn't make sense to me why certain things were going up. Like, I look at Tesla. Tesla should be like a $50 stock, or at a minimum, it should be way less than what it is, because I think its price to earnings is like negative big time. The company hasn't done anything, and their stock price has completely exploded for literally no reason. They haven't done anything in my mind that's extraordinary. And EVs in general have got to be the biggest scam in modern history. We could not provide the world with enough minerals to supply that many batteries. It's not possible. And unless they found a way to, not use cobalt or not use lithium ion or something, we don't have physically enough resources to convert everything to electricity. And or electric vehicles, sorry, like if you're going to do all your gas cars to electric. And it's super expensive. Like, it doesn't make any sense. Like, developing countries like India are not going to want to buy, 50 grand Teslas that only have a 7-year lifespan before you got to change out their batteries. 7-year effective lifespan. So, just on the topic of investment decisions, everyone's buying these green stocks. They're buying renewables, and I owned renewables briefly, but they are based in South America. So that was actually an area where renewables made sense because of their rivers. It was a hydro company. That made sense. But here in Canada, like, we have some of the best oil in the world. Like, just the way it's set up, we have such long life reserves. It doesn't make sense why everything is so heavily discounted. And even today, like, they just came out with an article saying how Biden was going to remove or not grant drilling, I believe, on federal lands or public lands or something, which will essentially end U.S. Shale hypergrowth. They won't be able to produce nearly as much. So what's going to happen? Oil demand is going up, and the U.S. is now producing less. So, it doesn't, basic insight would tell you that, oh, okay, oil is going to go up, so you buy oil. But people aren't doing that. People are buying renewables. And it's kind of stupid, actually. Like, you got companies where oil hits $60 and they're now trading at like a 60 plus free cash flow yield. And the guy that pointed this out was actually I must have found this by accident. This one company, Athabasca Oil, I kind of found it as a joke. Like, who pays 20 cents for an oil company? And then you kind of start thinking about it, and you're like, well, if oil goes to 60, these guys are they're huge. They're going to go up, like, big time. Like, you might make, like, 5 times your money. So I bought, like, 130,000 shares-ish. And I am super confident we'll hit 60 by, like, May, if not sooner. But anyway, sorry, a little off track there. But point being is, we're going to see like the largest, again, this Eric Nuttall or Nuttall, whatever you want to call him. This right here, I'm going to say here, this is his idea. But he was saying that it was the fear of peak demand is going to lead to the reality of peak supply. Those are his words, not mine. And he's 100% right, because if you look what's happening, oil is not going to decrease in demand. I think it was BP was like, we already hit peak demand. That's not, well, who cares? You know, quite frankly, if you're an oil company investing in renewables right now, you're stupid. Like, why would you do that? We got at least probably 20 years of growth. You know, they're saying by 2050, we're going to have like 2 billion more people that are going to be added to the world. And they're mostly from non-North American, non-European countries. So why would you not produce more oil? We have at least, some places have like 50 plus years of oil reserves. So why would you stop producing oil? You know, as a shareholder in these companies, it would be like game over, like see you later. Why would I invest in you? But back to investment choices. I was at Suncor briefly, Interpipeline, Imperial Oil. You know, these are fantastic companies. But I was doing the math and I figured, you know, if oil hits 60 or even 70 or $80, you know, 80 is maybe a stretch, 60 not so much, maybe 70 is more of a realistic goal. These companies, I don't know, their free cash flow yields don't necessarily change a ton with how oil goes up, but companies like Athabasca Oil, New Vista, Baytex, Meg, I think another one was Torque Oil and Gas is one of them. The amount of money they make is like exponential. Like the more oil goes up, they start like basically becoming money printers. And of course the differential matters. I think the differential has to be at $10. But even at $15, it's not like it's a big difference, but it's less. But point being is they're basically printing money. At $60, these companies are printing money. And no one's buying them. No one is buying these extremely profitable companies once oil hits 60. Oil's already at $53. You know, they're saying that we're going to average 53 for 2021. We're already at 53. And we're the first month in. And it's very obvious we're going to have a supply issue. You know, a lot of our inventories that were built up are being brought down. And I think some of them are already 40 or 60% down from what their highs were. So you can tell that we've already recovered, at least partially recovered. And I even saw a graph where our demand was already back at 97 million barrels a day, or 96 million, which was only down 4 million barrels. And some of these companies are trading at more than 50% discount. Recently, that's probably different now. Maybe it is only 50%. But oil prices haven't dropped that much. They're actually at what they used to be in, I believe, 2019. Or 2018 for a period of time, where most companies are trading at a much higher level. So, you know, I was doing research, and turns out even companies like, I think it was Fidelity. Fidelity Contra Fund was the thing that Eric Nuttall had pointed out on his Twitter. They were trading. They didn't have any energy in their portfolio. It was like very minimal energy. So big institutional investors didn't have any oil in their portfolios. And, you know, for obvious reasons, it doesn't make any sense. So a lot of these big companies, big firms, big investment companies that do like mutual funds, they're super heavy in tech. big tech stocks.